Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continued its decline on Wednesday, extending a 4-day correction and eyeing the support level of 63.8090 now, with traders expected to keep an eye also on the 60-day simple moving average, which is lower at 63.3545, just around this region here. In the US, interest rates are expected to hold steady for now as the Fed Chairman Jerome Powell maintains a cautious data-dependent approach following the May 6-7 FOMC meeting. Softer April inflation data and rising risk appetite have fueled expectations for a rate cut by September. The Fed also reaffirmed its readiness to conduct open market operations to maintain the federal fund rate within the 4.2 to 4.5% target range. Meanwhile, back home, the Reserve Bank of Australia cut its official rates earlier this month by 25 basis points to 3.85%. Yesterday's data showed the latest monetary policy report, the MPR release, which projects a further decline to 3.2% by 2027, suggesting more easings ahead. Meanwhile, the RBA's monthly CPI indicator held steady at 2.4% in April. Looking ahead, the market's focused now on the preliminary GDP, the US Core PCE Price Index, widely regarded by the Fed's preferred inflation gauge, and then on Friday we've got China's manufacturing and non-manufacturing PMI, all likely to cause a little bit of a disturbance in the currency. So with the market weak, as I mentioned, we are looking down towards 63.8090. Keep an eye on that 60-day simple moving average as bargain hunters may be lurking if we go towards that level, around 63.3545. A bounce is anticipated from there, and I feel the market may rebound or bounce back towards 65 and eventually 66 cents. The euro dollar extended its decline on Wednesday, pressured by the strengthening greenback after the US dollar index, which measures the greenback strength against a basket of 6 major currencies, surges through 100 and settled at 100.25, buoyed by a sharp rebound in the US consumer confidence, marking its first notable rise in 6 months. Meanwhile, the US interest rates, as I mentioned, aren't expected to get change anywhere in the near future. So with that, all eyes will now be on Germany's preliminary CPI, the US preliminary GDP, and also the Fed's preferred inflation gauge, as I mentioned, US Core PCE Index. Looking at the technicals, it does look like to me that it could be a little bit more towards the downside, with the support seen at 112.2025 or to around 111.70, and reassess just in case we get a bounce and eventually look back towards that 115 area. Also in other news, a US trade court blocked President Trump's Liberation Day tariffs, ruling he overstepped his authority by imposing broad duties on countries with trade surpluses. The court stated that only Congress has the constitutional authority to regulate foreign commerce. Moving on to the dollar yen, well, with the dollar rallying, the market is pushed higher and now got its eyes set on 145.95 to around 146.45. I feel the market may find a little bit of trouble there. It was relatively strong back in April, May, but I feel the supply could increase like it did back here in March and see a correction that could see the market turn away from 145 and head back towards the region of 142 to 140, where it's formed a base. Sterling also weaker into its third consecutive day and looks towards a support level of 134.15. Break there could trigger further weakness, but do keep an eye on this trend, which has been somewhat strong all the way back to the region of this year in January, where it emanates from. A little bit deep though to assess that we could get down to 131, but I feel there it could be in terms of support around 132.70 to 133.45, and then from there see a bounce. A very heavy drop when it comes to gold, and the market's now looking towards its trend line. Not as deep as 3,170.75 area, but I feel the market may be eyeing the level around 3,200 before any initial bounce, and look back towards 3,300, and with the broader call at 3,500. Wrapping up with oil, the market still maintains its bullish stance since the divergence kicked in and looking primed to a further rally, and that is on towards 64 to around 64.60, 80 area where profit taking may emerge as recently seen. Any weakness should find support around 60.60 to 60.80. Well, that's about it. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.